how Cathie Wood became the queen of investing. Forced to leave her position as portfolio manager, Cathie Wood faced the daunting task of starting over at the inconvenient age of 54. With time alone at home due to her 3 children, her dogs, and the helper being away for 2 weeks, she was able to focus on what was necessary to succeed. With the time to think, she realized that if she could combine the technologies that had invaded her industries and use them in her own sector, she would be able to create something new to disrupt the world of finance. Back in the 50s, Los Angeles was on the rise as people everywhere flocked to the city, over 3,000 every month. 2 of those were the parents of Cathie Wood, then Cathie Duddy, who came to the city from Ireland during the post-war boom of the 50s. Cathie's father was a radar engineer for the Air Force, and because of having to relocate for work regularly, the family would live all over the United States. This meant that the young Cathie would experience a wide variety of perspectives on life, making her adaptable as well. The young Cathie graduated at the top of her high school class, being accepted into the University of California. The oldest child of an immigrant family, Cathie knew that her role was to carry the family forward. It was by now the 70s, which saw a depression that affected everyone, including the Duddy family. Working part-time to make her tuition payments, Cathie wanted to go into science and technology like her father, but he steered her away from it, believing that she would succeed better in business. A family-focused Christian, Cathie followed her father's advice and pursued economics and finance, with the goal of providing quality of life for her family as the eldest. She studied under famed economist Arthur Laffer, who was famous for his theory on how to maximize tax revenue without having to increase rates. Laffer mentored Cathie and had a profound influence on her, leaving her with the same beliefs about tax cuts benefiting economic growth. Thanks to this mentorship and Cathie's own drive, she became the top of the college, and Laffer was sure to find her lucrative work when she graduated. She became the assistant economist for one of the largest investment companies during the 80s, Capital Group, and remained there successfully for 3 years, despite it being at the end of one of the worst decades in US economic history. Unemployment was huge, inflation was even worse. By the end of the 80s, it was a disaster, but it was going to rebound, which was when another firm, Jennison Associates in New York, recruited Cathie as chief economist at just the age of 25. Unemployment is bad enough, but inflation affects everyone, and so, in the 1980s, the US had to do something to sort out the economy. Of course, it was then that Ronald Reagan came along with new ideas about how to fix America's financial situation. Reaganomics, as it was called, was criticized by many, including then chief economist at Salomon Brothers Henry Kaufman, known as Dr. Doom. In 1981, Kaufman warned that Reaganomics would cause interest rates to soar, and many believed President Reagan would kill what was left of the economy, but Cathie Wood did not. Thoroughly analyzing all available data, Cathie realized she could disprove Kaufman's claims. She saw that everyone was focusing on the inflation, but she argued that the interest rates had peaked and could even go down. Of course, her opinions were dismissed like many young women in finance at the time, but history will always remember that she was right. By the end of the following year, inflation had fallen to just 5%. As America rebounded from the slump of the 70s into the exciting 80s, Wood's ability and intellect served her well, and she rose through Jennison to take the managing director role. She would remain with the company for 18 years, building a career that would be the envy of most people, and did it all while settling down and raising 3 children with then-husband Robert Wood. By this time in the 90s, technology had begun its incredible rise and the dot-com boom was well underway. The strong economy created new types of investment funds, hedge funds, which by design were a means for allowing their managers to make billions in personal gains. Their fees are much higher than a usual mutual fund company. Cathie Wood observed all of this happening and considered what she should do next, thinking that it might be time to strike out and try making something herself. In 1998, her colleague, Lulu Wang, a highly profitable hedge fund manager, was thinking the same thing. Wang had become a housewife after college but got tired of it and began pursuing an MBA at Columbia U. This brought her to Janus & Associates, where she rose through the ranks, similarly to Wood. Wang would eventually become the company's executive vice president, being responsible for $4 billion worth of assets. Wang wanted more though, so she decided in 1998 to start her own hedge fund and needed a capable partner who would complement her well, which she knew she would find in Cathie Wood. The pair started Tupelo Capital Management together, and with it being the time of the dot-com bubble, Tupelo managed to amass over $800 million by the year 2000. Despite this, and the recognition she and Wang were earning, Wood realized that this was not her true goal in life. No, she was much more passionate about finding companies with the potential to change the world that are undervalued by her peers on Wall Street. Since the interest rates were low, it was a time where new companies could get the capital they needed. With the marginal capital gains tax lowered by the Clinton administration, the stock market saw an unprecedented amount of money flowing into it. The Nasdaq index rose by 400%, and Cathie Wood saw an economy that had done exactly what she knew it would. Despite having a highly lucrative career, she left Tupelo Capital Management, joining AllianceBernstein, where her ideas about innovative companies were respected and she was given management over $5 billion. She focused on smaller cap stocks with high growth potential, while others were looking the other way. Her fund outperformed the indexes on basically an annual basis, but her portfolio was considered volatile. Still, she saw success, but something else was right around the corner that would change everything for everyone. The housing crisis of 2008 was one of the most damaging periods for liquidity.
Here you can see the 5 innovation platforms are the biggest bubbles on this chart. But there are other technologies. Each of the 5 is going to be multiple trillion dollars of market cap, we believe, in the financial markets during the next 5 to 10 years. You can see other technologies evolving with them.
As companies began to lose short-term funding, which led to them dropping assets and putting pressure on the stock market. As banks and other funds tried to drop assets to improve liquidity, several banks and companies would go under completely. Because of Cathie Wood's focus on smaller, more volatile stocks, her portfolio faced a sharper drop than most, and it crashed harder than the S&P 500 in 2008. Wood believed that this would be temporary and that they would recover, but her investors were not satisfied. As hers was a mutual fund, the investors were within their rights to withdraw their investments, and AllianceBernstein asked her to add some index funds to her portfolio.
Because portfolio managers and analysts, they run back to what they think is safety. They tend to run back, diversify their portfolios, get them closer to benchmarks.
As investors scrambled to balance their portfolios, the stocks Wood focused on would be punished disproportionately in the early stages of the crisis, but she knew that they would recover and that index funds would not help her to excel. So it was then, in 2014, that a very unsatisfied and jaded Cathie Wood decided to leave and start again at the age of 54. By this point in her life, Cathie Wood could have easily retired, having made more money already than the vast majority of people on the planet. Despite the new young investors having their turn at the market, it would be age and experience, even context, that would help Cathie Wood in what she would decide to do next. A woman of faith, she believed that she would best serve her God by achieving a positive future for everyone, and this time she was taking no advice from anyone else.
God himself.
Been in the financial industry, and after the tech and telecom bust, and then even more so after 08, 09, I began to see just incredible risk aversion, career risk, business risk, and everybody was worshiping the almighty index, benchmarks. And that was not consistent with what we were doing at all. So we were becoming, I describe it as an otter duck.
She noticed that with the dot-com bubble burst and the financial crisis at the end of the 2000s, there was more risk aversion in investors, and this was no good at all for investors. people who improve the world. With everybody focusing only on the index, Cathie Wood would focus on creating a new kind of exchange-traded fund, or ETF, that didn't exist yet. An idealistic person, Cathie Wood is able to convince others with her confidence in her ideals. As stock prices themselves are simply proof of confidence in a good, a service, or even a currency, confidence is everything. Cathie had, of course, done plenty of research into her investment ideas, which meant she was definitely justified in being confident. However, her new fund would need capital, and she was just not getting any traction. Investors were skittish, as they'd been burned before. After 2.5 years of no traction, she had begun to doubt her idea, when suddenly, the backer she'd been looking for found her.
2.5 years of no traction, effectively. I began to say, wow, was that a bad move?
Bill Hwang, a hedge fund investor, was on track to becoming one of the wealthiest investors in the world after Julian Robertson had given him $25 million to start a hedge fund back in 2000. In under 2 decades, he had turned the $25 million into almost $30 billion.
We see how God is leading the whole world, and human race through these companies.
But then, a catastrophic mistake led to him losing $20 billion in just 2 days. Despite this, Hwang did not give up. He is another devout Christian, and at the time saw Cathie Wood as a person he might be able to rely on to start his climb again. Hwang would provide the seed money to Wood to start her various ETFs, and this reignited her confidence that her ideas would succeed. Now she could begin creating ARK Invest, an investment management firm. All she needed now was a way to get eyes on her and her concept. Over the years following the financial crisis of 2008, people had grown distrustful of active investment management.
As you know, indexing has continued to perform really well against a broad base of active managers. What I would say is high-cost active management is essentially dead as a practice.
And by 2019, indexed assets had more assets than all the collective funds. The thing is, if everyone is passively investing in everything, there's no way for a financial system to work. Cathie Wood knew she could succeed by doing things differently. Cathie Wood had noticed the rise of social media too, with Twitter becoming, for better or for worse, the way that most people around the world connect and communicate. Still, very much a technophile, Wood was never far from the devil's edge of the technology scene, and she had witnessed the rise of GitHub and what it did for software. By taking influence from the industry disruption, she realized that she could bring plenty of attention to her ideas by opening up about her research. In an industry where most professionals will never give away their secrets, once again, Wood bucked the traditions and innovated. All the time, she was still somehow a relatively unknown name in the world of investments and investors, but soon she would be the queen of the retail investors. In 2018, Cathie Wood would appear on the news, telling the anchors that she believed that Tesla, which was struggling with serious production problems, would see an over 1,000% increase in its stock by 2023, and she was widely ridiculed for it. Looking back, and with Elon Musk one of, if not the richest men in the world, it's clear that she was right on the money. By 2021, Tesla had surpassed her predictions, and while she had been ridiculed before, a particular group of investors had begun to pay close attention to her. By 2019, there were 5 billion people using the internet, with over 400 million users on Reddit alone, and there was a group coming together on r/Wall Street Bets that would be keeping a close eye on Wall Street. Of course, no one was really paying much attention to them back then, but something earth-shattering was about to change everything. At the end of July, a small virus appeared as if from nowhere in the small area of Wuhan in China. Of course, everyone knows this story, but what's really interesting is what it did to the investment world, especially when the Fed started giving free money to basically everyone. To ensure these stimuli would be possible, there were trillions of dollars of newly printed money. Immediately, trading platforms, cryptocurrency exchanges, and everything from Robinhood to TradeStation began capitalizing off the extra money. Suddenly, the apes of the Reddit community had the disposable money to get involved and go against Wall Street. When opportunistic Wall Street investors began short selling on a video game retailer GameStop and movie theater chain AMC Theaters, the apes had had enough. A revolution began that saw regular people using their money to buy stock in these companies and others, shooting the stock to the moon, as they say. ARK Invest grew by 100% in 2020, and the shift away from Wall Street began, with costless trading available to basically anybody. Cathie Wood's predictions were coming true, and while nobody on Wall Street had listened to her, retail investors were, and they were benefiting hugely. However, by the start of 2021, ARK had dropped by 14%, which would be enough for index investors to bail out, but not the online Cathie Wood community. While many would call her crazy before, and still did then, it was not a smart idea to count her out or dismiss her as lucky. Cathie Wood is a disciplined manager with decades of experience and ensures that her portfolio is diverse, with no one particular stock ever occupying more than 10% of it. From finding her feet in finance to opposing the curve the whole way through, Cathie Wood has proven herself to be a force to be reckoned with and not a person to disregard. Today, she continues to be heard, appearing all over the news and the internet. What she says, people pay close attention to, and she is known to have the mind, the experience, and the will to look in places where others won't dare to continue her success. She remains a controversial figure to some, but to her legions of loyal followers from outside the traditional channels, she has become their trusted leader, their advisor, and their queen.